Income Tax 2020, Practice Problem 1, Presentation 48, Rental Property, Schedule E, Data Input into the Tax Formula with the help and use of Excel. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along. However, I do think they have a free 30-day trial, so if you can get access to a promo or demo version of it or any other tax software, it could be a good tool to practice with. Continuing on with our comprehensive practice problem number 1, this time we're continuing on with our Schedule E. So in prior presentations, we entered information in the first section related to income, then information related to the above-the-line deductions, then information related to the itemized deductions, then we added a Schedule C, then we took a look at page 2 in order to enter our credits and focused in on the credits, and now we're taking a look at a Schedule E. So we've taken the data input and input it into our Schedule E here, so we're going to call this good at this point, and then now we want to kind of summarize this in our Excel worksheet, double check this with the use of our tax formula. So the bottom line on the Schedule E then is at $3,990, which ties out to our worksheet here. And now we want to tie this out to basically our total worksheet. So that $3,990, you'll recall, then is going to be counting against the income, the other income. And that's why the IRS is a bit skeptical of losses. So notice they may limit the losses, and we're going to say that they actively participated, and therefore they're going to get to take part of the losses and not be subject to the passive activity rule that would limit or remove the losses and take it against the other passive activities. In other words, if we jump on over here to form 8582, we see the loss here, and this is going to be the passive activity loss limitations, and these are going to be loss limitations that rental property could be subject to. You see our 3,900 loss there, and then we have the special allowance for rental real estate activities with active participation. So we're saying there's active participation here, and therefore we're basically able to take the 3,990 of the loss, even though some of it could be limited due to passive activity for the rental income. That then flows forward to the Schedule 1, as we can see here. Schedule 1, there's our 3,990 that's in the additional income. That's netted to the Schedule C income, the 300 here for the unemployment, and the gambling winnings for the 51,606, which is going to roll forward to the first page. There's the 51,606. Let's see if we can mirror this now on our Excel worksheet. So now we have our Excel worksheet. Now the tricky thing is here, I'm going to ungreenify these. I'm going to right click on these and ungreenify them. We have this item down here. Now this is a loss, so I need to include that in the first page or into our formula, but make sure it's a loss. So all these deductions have been deducted, and now I'm going to take basically the bottom line, or in essence net income, of the Schedule E and put it into the top line of our tax formula, recognizing that that positive number is a loss. So I'm going to take our top line of our tax formula, and I'm going to say minus, because I have to flip this, I have to make it a loss. And then I'm going to pick up that 3,990. So there we have it. So now in our tax formula, you can see how that basically flows in. Similar kind of process with the tax return as far as the 1040, although they break out a few more line items, right? But we saw that, that combined together in the income level. So now we have the total income of the 131,736. So we got the 131,736. We got the adjustments to income of the 13,464. So we got the 13,464. That should bring us to our AGI at the 118,272. So there's the 118,272. We then have the 118,272. We have the itemized deductions instead of the standard. That might change because now that this could have an impact on our AGI, which could have an impact on some of the phase outs. So we're at the 26,175. Let's see if that ties out over here. 26,175. It does. So we're still good on the itemized deductions, and then we're going to go back on over. Then we have the taxable income this is the qualified business income deduction at the 10,166. That looks good. We have then the taxable income 81,931. So we have the 81,931. And then the tax is going to be calculated. I'm going to rely on the tax software to do the calculation. That's going to be at the 9513. So I'm going to actually input this in here, changed now, 9513. I'm dependent on the software for that. And then I'm going to say that the tax credits are the 4680. See if there's any change there. The tax credits we had 4680. So here's this. Here's the 4680 tax credits that are non-refundable tax credits. Next, we have the other taxes. This is the self-employment tax on the Schedule C. That did not change, 7728, or it should not have, right? And then we have the total tax at the 12,561, which takes into consideration and includes the non-refundable credits, 12,561. Then we have the payment information, including the W-2 wages, as well as the refundable portion of the credit, even though, again, it's not kind of refundable here. It's just that's how they break out the HOPE credit. It could be refundable if necessary, but they put it down here in that section, in the payments section. And that adds up to the 19, so that's where this 19 is. So that's going to be the W-2 withholdings, the estimated tax payments that we made for basically the Schedule E, and then that 1,000 of the credit. So that brings us to that 19,000. The difference between that 19 and the 12 being 6,439, which is our current overpayment, matching up the 6,439 over here.